Ladies and gentlemen, good morning and welcome. My name is Dr. Laila Masharia, the Vice Chairperson of the Board of Directors of Centum Investment Company PLC. Our Board Chairperson, Dr. Donald Kaberuka, was not able to join us physically today and sends his apologies. I shall therefore proceed to chair this meeting on his behalf. The ongoing constraints around the COVID-19 pandemic have necessitated that we alter how we undertake this AGM. I sincerely appreciate all who have managed to dial in and connect through the internet to be with us today. While this virtual AGM will not provide the same interaction as if we were to meet in person, we have endeavored to offer the functionality to allow real-time questions, responses, and voting updates. Let me take this opportunity to introduce the panel that is with me today. Seated on my right is Dr. James Moria, who is the Chief Executive Officer of the company, and Mr. Wambua Kimeu, who is the Finance Director. On my left is Mwangi Mbogo, the Director of Legal Affairs and Company Secretary. Also with us today is Michael Mugasa, the representative of our external auditors, PricewaterhouseCoopers. As is our custom, we shall start the meeting with a word of prayer from Mr. Brian Waswa, the Senior Projects and Design Manager at Centum Real Estate. Mr. Waswa.
Ladies and gentlemen, let us believe and pray. Almighty Jehovah, we come before this morning. We thank you, Father. We worship your name, Almighty Lord. Thank you for the members who are gathered here, Almighty Lord. And thank you, Father, for their shoulders, wherever they are, Almighty Jehovah. Lord, we thank you today for the gift of life. We thank you, Father, for enabling us to reach this journey until this juncture, Almighty Jehovah. Even today, Almighty Jehovah, in this AGM, Almighty Lord, we thank you for the past successes that we have had. Even though I have not succeeded so well, Almighty Jehovah, we still thank you, Father. Lord, as we go forward, we decree and declare divine wisdom upon this company, divine grace upon this company, Lord, divine growth upon this company, Almighty Jehovah, and all the glory and honor shall be unto you, Lord. Even upon our shoulders, Almighty Jehovah, we decree and declare divine health and divine life. Lord, we thank you and we worship your name, Lord. In the name of Jesus Christ do we pray. Amen. Thank you, Chair.
Thank you, Brian. Allow me to introduce the other directors of the company. Dr. Donald Kaberuka, Chairman. Dr. Moses Ikiara, Director. Catherine Igathe, Director. Mary Ngige, Director. Christopher G. Hooker, Director. Andrew Mukite Musangi, Director. Honorable William Biaruhanga, Director. Susan Ithuku, Director. Given that we have lost one of our long-serving directors, Dr. Chris Kirubi, in the course of the year, we shall now proceed to observe a moment of silence in his honor.
Let it be, let it be, let it be, let it be, oh, let it be. There will be an answer, let it be, oh, let it be, let it be, let it be, oh, let it be. Whisper words of wisdom, let it be.
Thank you. Dr. Chris was an admired and cherished mentor, and we at the company owe him much gratitude. We have committed to build on the foundation that he laid. Here is a brief tribute to the man we called Chairman.
Christopher John Kirubi will be remembered for many, many things. I think for me, some of the things that I would like to highlight is the impact that he had on people. In mentoring leaders, in creating business opportunities and employment opportunities for many, many people, not just within Centum, but beyond Centum. He'll be remembered for the great enterprises that he has built and which stand. He was a builder and a creator of organizations and institutions. And is a man who saw no limitations in his mind.
With him, the idea is a big picture. You keep going, you get up, you carry on. And all of those things, in addition to collaboration, he believed that you never do things alone. He pulls us together. He worked through others, and it's a gift that many people do not have. You can be excellent, but be an individual contributor. But he knew, and his interest in youth is because he knew youth are wealth.
His way of thinking was just amazed me. His acumen, his way of joining things together. He was truly a brilliant man.
I'd like to thank you, Dr. Kirubi, for the impact that he has implied in my life.
We celebrate his life. I pray that may his soul rest in eternal peace. Thank you very much.
I now call upon Mr. Mwangi Mbogo, the Director of Legal Affairs and Company Secretary, to confirm the presence of a quorum.
I confirm that a total number of 4,539 shareholders, representing 65.29%, have registered and are participating in this virtual annual general meeting. I therefore confirm that the meeting is properly constituted. Thank you, Chair.
Thank you, Mwangi. Having confirmed that we have a quorum present, I declare the meeting properly constituted and convened. I would like to call upon the Company Secretary to read the notice convening the meeting.
Our esteemed shareholders, the notice for this meeting was published in the dailies and uploaded on our company's website for your attention. I'll now read the notice. Notice is hereby given that the 54th Annual General Meeting of Centum Investment Company PLC, the company, will be held via electronic means on Friday, the 24th day of September 2021, from 11 a.m., in accordance with the High Court order issued in miscellaneous application number 680 of 2020 for the following business. Agenda. First, to confirm the constitution of the meeting. The Secretary to read the notice convening the meeting and to table the proxies and determine if a quorum is present. 2, ordinary business. Consolidated financial statements, directors and auditors report for the year ended 31st March 2021. To receive, consider and adopt the consolidated annual financial statements for the financial year ended 31st March 2021, together with the directors and auditors reports thereon. The declaration of a first and final dividend, to consider and if thought fit approve, in accordance with Article 118 of the Company's Articles of Association, the directors' recommendation to declare a first and final dividend of Kenya shillings 219,500,000 for the financial year ended 31st March 2021 to shareholders on the register of members as of the close of business on 8th of October 2021. Remuneration of directors. To approve, in accordance with Section 681, subsection 1 of the Companies Act 2015, the directors' remuneration report for the financial year ended 31st March 2021, contained in the consolidated audited financial statements. Election of Mr. Andrew Mukite Musangi as a director of the company. To elect, in accordance with the company's Articles of Association, Mr. Andrew Mukite Musangi as a director of the company. Election of Kenya Development Corporation Limited as a director of the company. To elect, in accordance with the company's Articles of Association, the Kenya Development Corporation Limited, successor entitled to the Industrial and Commercial Development Corporation, as a director of the board of directors of the company. Re-election of Dr. Moses Ekiara a director of the company retiring by rotation. To re-elect, in accordance with Article 88 of the company's Articles of Association, Dr. Moses Ekiara, a director retiring by rotation and who, being eligible, offers himself for re-election. Appointment and remuneration of the auditors. To appoint PricewaterhouseCoopers LLP, PwC, as auditors of the company in accordance with Section 721, subsection 2 of the Companies Act 2015. To authorize the board of directors of the company to fix the auditor's remuneration in accordance with Section 724 of the Companies Act 2015. And 3, any other business. To transact any other business that may be legally transacted at an annual general meeting and for which due notice has been given. Thank you, Chair.
Thank you, Company Secretary. Our next item is to confirm the minutes of the 53rd Annual General Meeting held on the 18th of September 2020, which were also uploaded on the company's website. I can confirm that Stephen Irungo has proposed and Jeffrey Maoga has seconded, and that the minutes are hereby adopted. Shareholders, the Board Chairman Dr. Donald Kaberuka's statement and the company's financial statements for the year ended 31st March 2021 are contained in the integrated report, which has been availed on the company's website. I recommend that we take them as read. I will now proceed the Chairman's report on his behalf. Good morning, shareholders. I would like to take you through the strategic objectives that we have under Centum 4.0 strategy, and to update you on progress that we have made on the various key objectives. You will recall, shareholders, that our strategy was based on 5 key pillars, 3 of which were financial and 2 of which were non-financial. The first pillar of the financial objectives was the returns and dividend payout. You will recall that our commitment under this was to accomplish a net asset value of 812 billion. Oh, sorry, let me just make sure this is correct. Of 82 billion net asset value by FY21. The second objective was to deliver in dividends the higher of 30% of cash annuity income or the previous year's dividend payout. The second objective was around capital structure and liquidity. We had an objective to fully pay down the company's long-term debt and to increase the value of the marketable securities portfolio. Our third objective was around operating costs. Our goal here was to maintain cost to annuity income at below 30%. For non-financial objectives, we had a portfolio focus to maintain a portfolio allocation to our 3 asset classes. We had an objective to maintain real estate at between 35 and 45% of the portfolio, private equity at 35 to 45% of the portfolio, and the marketable securities portfolio at between 20 and 20% of our overall portfolio. Our 5th pillar was also a non-financial objective, which was cross-cutting organizational effectiveness. This was to institute strategic enablers, such as governance, structures, people, processes, technology, and culture, to make sure that we could facilitate the effectiveness of our execution. As an update on the returns and dividend payout, this was 52% achieved. We were able to accomplish 42 billion against our strategy target of 82 billion. For the dividend payout, this is 64% achieved. We've been able to pay 1 billion shillings against the target of 1.6 billion for the financial years 20 and 21. On capital structure and liquidity, We've been able to retire 13 billion of our long-term debt against our target of 16 billion, which is an 81% achievement. We have also increased our marketing securities portfolio from 4.1 billion to 7.5 billion, which was our target, which we're pleased to say was 100% achieved. On operating costs, as I explained, we had a target to maintain our cost-to-income ratio at 30% as our ceiling. We are still at 44% cost-to-income ratio on this, which is 65% of our target. We'll be explaining shortly some of the efforts that we'll be making to bring this back into alignment. For our portfolio allocation, real estate is at 64%, private equity at 19%, and our market securities portfolio at 16%. Management has initiated a number of initiatives to realign this portfolio to bring real estate exposure down to by about 20%. And we'll be explaining in more detail in the other presentations how we'll be realigning this. On organizational effectiveness, we now have all our portfolio companies devolved into independent operations and governance systems. A supervisory parenting model has been put in place to ensure that portfolio companies are strong and they have sustainable systems and procedures. Shareholders, I would like to give an overview of the dividend policy. Our policy, as you are aware, is to pay the higher of 30% of annuity cash income or the private year payout. The dividend, as you know, is to be paid from net operating cash income and not from capital. I'll just give you a quick update of our dividend payout drivers so that we understand how it was we made the decision to pay the dividend against our policy as we explained. Our income is driven by portfolio companies and the dividends that they generate. In this last year, due to the COVID-19 pandemic, we've seen a year-on-year drop of 59% from 3.695 billion in 2020 to 1.517 billion in 2021. We are also, the eventual operating profit is also driven by our operating expenses. Our operating expenses have dropped from 895 million to 669 million, a drop of 25% year on year. For finance costs, we've also made some progress. They have dropped from 1.8 billion in 2020 to 603 million in 2021, a drop that is a full 67%. Even though we have made progress on operating expenses and finance costs, these improvements were not enough to offset the drop in investment income occasioned by the pandemic. As a result, our operating profit dropped by 75% from 985 million to 245 million. Due to this impact, the dividend payout has dropped from 799 to 219 million, a full 73%. However, it is important to highlight that compared to 2020, where our net cash operating profit, the proportion of the dividend was 81%, whereas this year, it's 89% of the cash operating profit. More importantly, we would like to share with you shareholders what the efforts are that we will be making to enhance future dividend distribution. On each of the elements that we have shared, we will be working tirelessly to enhance the cash investment income. We will be doing this by exiting low cash yielding assets, those that we think have a limited growth outlook, and we'll be reallocating those proceeds to higher yielding securities to enhance our cash returns. We'll also be making special efforts to drive profitability further in portfolio companies so that we can get to a place where we facilitate resumption of dividend payment by portfolio companies in the upcoming financial year. On costs, we will be rationalizing our costs to reduce operating costs. Our operating expenses reduced by 226 million year on year, reduced by 226 million year on year. Our target is to further reduce the cost-to-income ratio to less than 30% in the upcoming financial year. For finance costs, as we explained, finance costs already reduced by 1.2 billion year on year. Our target in the upcoming financial year is to complete exits in the pipeline and fully pay down the debt as per our strategy to reduce our finance costs to zero. If we combine these three efforts, increasing our investment income, reducing our operation expenses, and reducing or eliminating our finance costs, we will be in a position where we expect a higher net operating cash profit to be available for distribution at dividends in line with our policy, without capital erosion. Accordingly, I would like to announce our first and final dividend for the financial year 2021. As I explained, the unprecedented COVID-19 crisis impacted many of our portfolio companies who have cut their dividend payments to conserve liquidity. And hence, we booked a much lower net operating cash income of 245 million for the period ended 31 March 2021. As such, and to cushion our shareholders, the Board of Directors has recommended the payment of a first and final dividend of 33 shillings per share, totaling 33 cents per share, totaling 219 million. Shareholders, I would now like to take you through our sustainability report. Our business strategy and corporate social responsibility are guided by the desire to make a sustainable impact along 4 CSR pillars. The CSR pillars are as follows. Education. We aim to create opportunities for young people to access quality secondary and tertiary education and to acquire requisite skills to break the poverty cycle. On infrastructure, we're improving the infrastructure in the community, such as schools, hospitals, water, and sanitation, for better learning and living environments. 3, entrepreneurship. We're empowering young entrepreneurs by equipping them with relevant business skills to build successful enterprises. 4, healthcare. Delivering quality and affordable healthcare to communities through mobile clinics, free medical camps, health walk runs, healthcare education. Sustainable investing is aligned to the UN Sustainable Development Goals. I'd like to share with you some of the activities that we have undertaken in the last years to align with these goals. Goal 4, quality education. We have awarded more than 250 scholarships to date in Vipingo, and every year the Vipingo Scholarship Program supports 5 bright but needy students to transition to secondary schools. 6, clean water and sanitation. We have installed seawater desalination plant, which provides potable water for the development and the communities around Vipingo. This plant has a capacity of 3 million liters per day. 8, decent work and economic growth. 100 graduates of the Vipingo Vocational Training Program are now in gainful employment. We also are proud that 7,000 plus job placements have been made through the Ajiri app since its launch in May of 2019. The Ajiri job and training centers are already set up across 13 counties. We also have 172 NYS graduates onboarded into the Tribus TSG company. Thank you. I now take this opportunity to invite the CEO, Dr. James Moria, to present his report for the year ended 31st March 2021.
Thank you very much, Laila, for that presentation. Wenye hisa wenzangu, nataka kuwapatia shukrani zangu na furaha yangu kujumuika nanyi leo katika AGM yetu ya 54. Na ningependa kuwapatia pia shukrani za dhati za wasimamizi wenzangu ambao wako hapa nasi. Tungependa sana kujumuika nanyi katika kikumbi kile tuna kama kawaida, lakini kama vile mlivyosikia, kwa sababu ya COVID hatujaweza kufanya hivyo. Nitawapatia maelezo yangu sasa kwa lugha ya Kizungu. Natarajia nyote mtaweza kunielewa. I want to go back to just our business model. Just to recap our business model, we started off with shareholder capital, and as you're all aware, as we've covered Centum 2.0, Centum 3.0, and Centum 4.0, we've not raised any new shareholder capital. We've used the existing shareholder capital to create value, invest in companies, and attract other funds. And we create our value through our investees. This is our portfolio company, through growth in value. And ultimately, we realize that value through dividends and exits. That's been the model that we've used. When we developed Centum 4.0, the board in its wisdom made a decision that they would like to have a sustainable dividend policy where the dividend was paid out of income, which is a cash income that we generate from the portfolio, as opposed from capital gains. And to do so, we have had to reallocate the portfolio into cash generating assets. That's why we've been working on building up our marketable securities portfolio. And that is largely because capital gains are relatively unpredictable in nature, whereas shareholders have an expectation to earn a dividend year on year. That's why we've been making that switch. And in making that switch, part of the cost item that has been a major eroder of cash income has been interest. And therefore, we made a decision to then repay the debt so that we would then pursue the next phase of the growth model, not using debt, but using our own internally generated cash flow. So if I go back to 2009, we funded the growth of this portfolio largely using borrowed capital. And what we've been doing as we've gotten into 4.0, and you'll see in a bit more detail, what we've been doing is repaying that debt, reducing the interest expense, and shifting part of the portfolio into a cash-generating portfolio, so that then you can be able to sustain a dividend from recurrent income, and then have a growth portfolio, which is largely going to contribute to growth in value, which is what we call net asset value per share. So the focus is on those two drivers of shareholder return, that is dividend and net asset value per share. That is how we've performed over time, and you will notice that we've had a decline in total assets from 2019, but that is largely because we've been going through a deleveraging process where we made a decision to pay down the debt. We had the option of carrying on with that debt as it is and reinvesting, but we made a decision to be conservative and preserve capital, which is a net asset value, and therefore pay the debt. Had we not taken this decision in 2018, 2019, we would have been sitting on a significantly higher level of debt, and there was a risk that value would have been eroded by what has happened with COVID-19, and would probably not be in the position that we are in today. So the reduction in total assets is largely because we've been reducing the debt component of the balance sheet. And the objective, as the Vice Chair said, is to totally pay the debt, because as you noticed, last year we incurred about 600 million shillings in finance costs. This is cash flow that would have been available to shareholders for dividend. So the objective we have and the priority we are focusing on in the current year is to complete some of the exits that have been delayed on account of the COVID-19 situation, so that we can complete the objective of fully deleveraging the balance sheet and make this interest expense available for dividend distribution. Just to emphasize, because the dividend distribution is coming out of recurrent cash flow as opposed to coming out of capital. So I just wanted to address questions shareholders have directed to me, why we have prioritized debt repayment. We've prioritized debt repayment so as to reduce the cash component of the finance cost that we are incurring, so that in turn then we can have more net cash flow available, because that is where the dividend, that is what is funding the dividend. We do not wish to borrow to pay dividend or to sell assets to pay dividend. That's why it's an important objective for us. We had hoped to have completed this by 2020. Unfortunately, it was delayed because we were not able to complete some of the critical exits that were in the pipeline. That's our portfolio as it is, and this is been discussed in some detail. We've been building up our marketable securities portfolio, and the role of this portfolio, again, some shareholders have asked us, why have you increased your allocation to marketable securities? Within our strategy, the target is to have up to 20% of our total assets invested in marketable securities. We are currently at 16%. We have about another 4% to go. And the role of this portfolio is to optimize the cash yield portion of the income, because we generate a higher cash yield on this marketable securities portfolio than we do generate the dividend yield from the growth portfolio. The purpose of the growth portfolio is to generate capital gain. The bulk of the return is through capital gain. Now, for us to sustain the dividend, and there's a lot of pressure and interest by shareholders for the sustained dividend, it is necessary that we switch some of the assets coming out of the growth portfolio into the cash yielding portfolio. So the objective for the marketable securities portfolio is to generate a cash return of about 14%. Right now, we've increased it by about 3.5 billion. The target is that we should take it to about 10 billion from the current 7.5 billion, so that we have at least 1.5 billion shillings a year coming out of our marketable securities portfolio. The real estate portfolio, as we've explained, we are currently above the internal threshold. We would like to have an allocation of about 45% in real estate as a sector. It's currently at 65%, but that is not because we invested 65% of our assets in real estate. It is because of how well this particular business has done for us. And in the last financial year, we did receive about 4 billion shillings from the real estate portfolio by way of repayment of shareholder loans back into the portfolio, and part of that money was used to pay down the existing debt on the Centum balance sheet. There may exist an opportunity over the remainder of the Centum 4.0 period, which is the next 3 years, to reduce our shareholding in either of our two companies in real estate by way of selling a stake to a minority investor. Indeed, this has been our strategy in most of our companies, where we create value and attract other investors into our portfolio companies. So that's what we intend to do, so as to reduce, largely to reduce the exposure and to enable us increase the allocation in other non-real estate sectors, where the target is to be at 45%. We are currently at 20%. Now, because we can only fund this reallocation as an investment company of 3 options. You can either borrow, and that is an option now that is not available to us because we've made a decision in the context of the current economic environment not to take on more borrowings at the Centum level, although our portfolio companies are free to take on debt at their level. 2, you can raise new equity, but as you are aware, our policy has been to grow organically, and the last time this company had an equity raise was 20 years ago in 2001. So we do not intend to raise new equity. So the only way we can rebalance the portfolio is by way of exits, partial exits from some of our portfolio companies to enable reallocation of the capital to other sectors, and that's something we are working on over the remainder of this strategy period. Would have wished to have done it earlier, but as you are aware, the investment environment has been severely constrained by the restrictions that have arisen out of the situation we've had over the last 2 years. We are, however, seeing a recovery and increased investor interest, and we are optimistic cautiously optimistic that we'll be able to book or to conclude some of the transactions in the coming financial year. From a performance highlight perspective, as the Vice Chair explained to you, the key number for you to look at and where the dividend comes from is the operating profitability of the company. And this declined by 75%, largely because of a decline in the total income. We tried to mitigate it by reducing operating expenses, which came down from about 900 million to 600 million, so those are 30% reduction, and through a reduction in interest expense, which reduced from 1.8 billion to 600 million, so a 67% reduction. This was arising out of the efforts we've made to pay down the debt and reduce the cost structure. Now we have work to do to bring the dividend back to where it was. We need to further reduce the interest expense, and the only way we can reduce the interest expense is by reallocating any capital that comes from any further future exits into the full repayment of the existing loans that we have. And that is an objective that we are working on. So it will be a priority. Some of the shareholders have asked me why we are not distributing the distributions that we are making or the capital that we've received from the exits. The intention of the board is to have a sustainable dividend policy, because if you make such a distribution, it is not replicable in future years. So the objective is to pay the debt so that we save on the interest, and we are cautiously optimistic that we should be able to do it in the coming months. The Vice Chair also explained that all the portfolio companies have now a management structure, full management structures within those companies, and they are no longer reliant on Centum Investment Company PLC as a shareholder providing them with management services. That gives us room to further rationalize costs at Centum Investment Company level, so that we can then bring our cost to income ratio in line with the objective. Those two objectives will reduce the outflows, but we're also working on increasing the inflows in terms of working on improving the performance of the portfolio companies. Last year, many of our portfolio companies adopted a very conservative dividend approach so as to conserve cash, and many of them did not pay us a dividend. We are working on supporting them, and you've seen some of them announcing results that are far better than what they had last year. So we're optimistic that they will resume dividend payment. And any exits we do, the objective is to allocate capital into cash generating portion of the portfolio, which is the MSP portfolio, with a view of getting to our asset allocation of 20%. So it is not our intention that 50% of the assets will be in MSP. Our target is to be at 20%, and we have about 2.5 billion to get there. We announced a loss at the company level, and a number of shareholders have asked why we announced this loss, what was the driver of the loss. You may be aware that we are required to conduct an annual evaluation of our investments. And last year, when the markets came down, multiples dropped, but also the underlying profitability of the portfolio companies dropped. Consequently, some of these revaluations were passed through the profit and loss, and we therefore had impairment provisions, which reduced the underlying value arising out of the market situation that we had. So that loss was not a cash loss, but rather it was a revaluation loss on the underlying portfolio. So when you see our numbers, the number that is driving dividend, just to recap, is the operating profitability. And what you've seen below there, those are largely impairment provisions and revaluations. Some of these may reverse as performance of companies improve and as market conditions recover, and we therefore see an improvement in multiples. We also have the consolidated financial performance, which my colleague, the CFO, Kimeu Wambua, will be speaking about, and we booked a loss of 1.4 billion. Now, the consolidated financial statements aggregate the profit and losses of different investees of Centum. So where we own more than 51%, we aggregate their P&L into one P&L. And we had one or two companies that had losses, and those are the companies when on aggregation led to the group or the consolidated financial performance booking a loss of 1.4 billion. However, I wish to highlight that the dividend is not paid out of the consolidated financial statements, but out of the company profit and loss, because it's a company that is paying. The company you've invested in is Centum Investment Company, and the company P&L is what gives you the real indicator of the performance of Centum as an investment company. The total return tells you how NAV has done. Unfortunately, the NAV per share last year declined by 10% for the reasons that I've explained to you, and the cash portion of the P&L declined by 75% again for the reasons that I've indicated to you, but we are working on improving. Okay. That is the NAV value movements for the year ended 31st March 2021. Private equity came down from 10.2 to 9.2. I have explained it came down largely because of revaluation movements. Real estate declined from 36 billion to 30 billion. That is for two reasons. One, we received a shareholder loan repayment from the real estate business of about 4 billion. That is largely in line with the objective to reduce the asset allocation weighting within the real estate portfolio. And we also had some revaluation, negative revaluation movements, largely arising out of deferred tax for Vipingo Development, which is a subsidiary of Centum Re, where we adopted a deferred tax of 30%, up from 5%. Marketable securities in aggregate has increased from 4 billion to 7.5 billion. The other headline numbers is borrowings, which have come down from 16 to 4 billion, so a reduction of about 12 billion shillings. NAV per share consequently came down from 47 to 41 billion, but as I've explained, about 4 billion of that number is largely because of revaluation losses and the dividend that we paid last year of 800 million shillings, because that comes out of the assets of the company, so it leads to a reduction in net asset value per share. This slide just explains what we've done, shows you the movement of capital, what we've done with the exit proceeds over the last 2 years of the Centum 4.0 period. So we've realized about 18 billion. 2.5 billion of that has been recognized in the P&L. And as the Vice Chair explained, the realizations in our P&L, that's where we funded our dividend from. So this is a capital account. So net of that, we had 16.5 billion shillings of realizations. Last year, we received 4.5 billion shillings from our real estate business in the form of repayment of shareholder loans, of which about 900 million was recognized in the P&L. The balance was not recognized in the P&L because it was a principal repayment of the shareholder loan. So from a portfolio perspective, we've realized about 20 billion shillings. There are a number of shareholders who've written to us and asked us, so where did the 20 billion shillings go to? And that's what I wanted to, that's what this slide answers. 2 billion to 2.5 billion has been reinvested in various portfolio companies within our growth portfolio. 3.5 billion has been reinvested in our marketable securities portfolio. We've explained the reason why that is the case, because that is what is driving a significant portion of the cash income, and that cash income is what is available for dividend distribution. We've repaid 13.5 billion in debt. Again, we've explained the reason why is so that we can reduce the interest expense and also so that we can reduce the financial risk. Had we not taken this decision and had we been confronted with the COVID situation, we would have been sitting with illiquid assets and a growing debt, and that would have been a difficult position to manage. And 692 million was used to pay the dividend for 2019, year which was paid in the 2020. So that reconciles the funds that we've received over the last 2 years from exits of assets. So if you want to think about Centum, it's actually a simple business. You have our cash operating profit, which is where your dividend comes from. And as the Vice Chair has explained, we've distributed this year, we intend to distribute almost 90% of our cash operating profit. You have the capital account, where we are largely reallocating assets with a view to boosting the cash income. And then you have the rest of the portfolio, whose role is to drive the growth in net asset value per share. I would like to pass on the presentation to my colleague no, it's actually, I still have some slides to go. It's not moving. Let's move to the next slide. Thank you. That's the next slide. This is a question that is very topical to investors, and that is what is happening in terms of the underlying value of the company. So what the board and management we've tried very much to do is that, despite the difficult circumstances we face, has been to preserve the net asset value per share, because we believe the share price discount to NAV is temporary, as long as we preserve NAV and we have strategies to grow net asset value, and we don't distribute dividend out of net asset value, out of the net asset value. So that's what we've been doing. So we've grown it from 36 to 79 shillings. It has come down over the last 2 years, largely because of various revaluations that have gone through the balance sheet, and that is largely because of market conditions as they have been. I, however, believe we've passed the bulk of the impairment provisions, and you may see exits at higher valuations. That then leaves us with the issue now of how do we close the gap. At least we're dealing with the issue of closing a gap, as opposed to an issue of creating value. So that's a question that confronts us. And this is a question that is high on the mind of shareholders, of the board of directors. We had a board retreat last month, and this is one of the pillars that the board is looking at. And there are a number of initiatives in the pipeline that are under consideration, and there are some that we are already implementing as management in terms of better communication, simplification of the communication so that it's clearer, and of course taking all these initiatives that will lead us to increasing the dividend per share, because we recognize that many of you are not able to sell at these prices, and therefore the only return you can get is dividend per share, and therefore this is something that we are seized of, and I want to assure the shareholders that we are working on to see what we can do to enhance dividend per share and sustain it, sustainably increase it. Let's go to the next slide. So some of the initiatives we are working on, we have a number of mature assets which we are working on monetizing. These are assets that have either limited room for further growth, or which are relatively yielding lower returns from a cash return perspective. So we are working on a monetization plan. It's important for us that we pay down the debt, because that we can largely save on the cash interest that we are currently incurring. And this has been delayed. We had hoped to have finished it by now, but we are optimistic we will finish it. And then enhance the cash yielding asset pool. The immediate goal is to increase it by about 2 billion. And then to deploy further capital to the private equity business. We think those combination of steps will lead to our shareholders earning a better return than they are currently earning. And we're also pleased with the fact that despite the very difficult circumstances we faced, we were still able to pay a dividend, not out of capital, but out of cash income. I would now like to hand over to the CFO, Kimeu Wambua, to take us through the financial performance. Thank you very much.
Thank you, James. And I'll now take us through the financial performance of the just concluded year. Kindly move to the next slide. Thank you. So I'll take us through the income statement. And really, when you look at Centum, as James has mentioned, Centum is an investment company. And to us, when we look at the income statement, it's really the total return statement. And the reason we look at it as a total return statement, it is because it basically outlines the asset, the investment income that we earn coming from the investments that we've made. And that investment income, then how we allocate it between our operating expenses, our finance costs, and also to any tax that needs to be paid on that. And then after that, then the second part is really to look at what are the gains that or losses realized that have been made through the revaluation of the portfolio. And revaluation of the portfolio is important because this basically looks at it, and when you look at the portfolio, you're asking at a point in time, if we were to exit this portfolio then and monetize it, then at how much would you be able to recognize out of that or realize? So when you look at the total return statement, then really it is a reflection of the investment operations of the company and what is coming through in terms of from the investment side and also including the revaluations. So earlier on, James mentioned that this year our investment income was about 1.5 billion, and this was really driven more from the income we earned from the marketable securities portfolio, as well as the income earned from the interest income earned from the shareholder loans that we've issued to some of our investee companies. Last year, we had a 2.2 billion gain, which was on the disposal of the bottlers, and that really is what highlights the bigger drop of 59%. But if you remove that gain, then basically between 1.5 billion and about 1.48 would really be the investment income, so really at par over the 2 years. Our operating expenses came down. The Vice Chair mentioned that there's been a lot of work that has been done, and we've been looking at in terms of how to enhance dividend, and one of the areas is on our operating expenses. We came down 25%. Our target is to be at 30% of the investment income, so there's still quite some work to be done around that, and we will continue to update as we report the next time. Finance cost, this has come down significantly. If you remember, over the last 2 years, we've really paid down quite a bit of debt. James mentioned 13 billion. In FY20, we paid about $75 million, and last year we retired the corporate bond that had been issued and listed on the stock market, about 6.6 billion shillings. So that has really impacted the return statement, because you can see the finance costs have significantly come down. Our operating profit was 245 million. And again, I wouldn't overemphasize that this is really the line to look out for, especially as we plan in terms of keeping in line with our dividend policy. And the dividend is to be paid out of the recurrent income that comes out of the operating profit. We had an impairment provision. This was a non-cash item that we passed through in our income statement. Here, the reason that you're seeing this number which is in the income statement and not below there in the unrealized gains, is because this was a prudent decision we took to fair value some of our portfolio assets, and these are the ones that are really below, that we were carrying at cost, and we opted to fair value this and pass this. As James mentioned earlier, we are quite conservative in terms of how we value our portfolio assets, and this is part of that reflection, that even at times, in as much as we look at the valuations, then it is important to make sure that we are in line conservatively and also with the benchmarks across the world. The profit before tax, therefore, was a loss of 826, lower than last year. And we had an income tax expense. This was more of a deferred tax expense item that we passed there at company level. So the unrealized gains, this is basically the revaluations we've done across the across our portfolio. And the main drivers here really on this unrealized losses, James mentioned one was coming from the revaluation of the real estate business, where we had the impact of the deferred tax. But then also, on the other hand, the performance of some of our businesses came down during the year as a result of the COVID pandemic. And then also multiples across the world also came down. As a result, then the valuations of some of the portfolio assets came down. And therefore, those revaluation losses were passed through here. So at a net asset value level, the net asset then came down, net asset value came down by 10%. Can you go to the next slide? So this here is really our statement of financial position, which is the balance sheet of the company. And this balance sheet of the company, when you look at it, I'd describe it as a strong and healthy balance sheet. And you know, when you look at the balance sheet, you'd ask, how do you tell that it's strong and healthy? So I think the first item is really when you look at our shareholder funds at about 41.8 billion. This is the net asset value that we were describing earlier, and this is really what belongs to the shareholders. And when you look at this, half of it is actually the retained earnings. These are gains that we've made in prior years that are still within the business and held as retained earnings. The other item is about 21 billion of revaluation reserves. So actually, when you think about it, is that what we do have distributable moving into the future as of today is about almost 20 billion shillings in retained earnings. If you look at the asset side of the balance sheet, again, just emphasizing on the strength of the balance sheet as it is, we have a portfolio of about 46 billion. And of this 46 billion portfolio that we have, almost 4.2 billion is actually invested in very liquid assets in the form of government securities and corporate bonds. If you look at then the rest of the portfolio, you've got about 11 billion in subsidiaries and another 3.5 billion in unquoted investments. Our net cash equivalent is about 867 million shillings. So if you look at the balance sheet, I'd say it is a resilient balance sheet and is actually better placed to withstand the pandemic as we've had it, and also in terms of just preparing us for the momentum to move forward. You can go to the next slide. So here really is what James had highlighted earlier in terms of how our cash flows have been. And I won't spend a lot of time on this, but James mentioned earlier that we did receive about 4.5 billion shillings from the real estate business. And from this 4.5, a portion of it went through our P&L, which was through the interest income that we received. And the other portion was really a shareholder loan that was repaid. During the year, we've also invested about 1 billion shillings into additional government securities. And we also paid down, as I mentioned earlier, the corporate bond that was listed in the stock market. So at the end of the year, we had closing cash position of about 149 million, of which we had drawn down our OD, about 1 billion shillings, and about 867 million in the form of cash in our marketable securities. Can go to the next slide? So we mentioned around, this is the consolidated income statement, and we prepared this because it's an aggregation of all the businesses that Centum has invested in. So you basically take all of them and add them up. And you can see from here, we've got trading businesses, we've got business in the financial services sector, you've got the real estate businesses. So it's really an amalgamation of all these businesses. And here we have added up their P&Ls and then to reflect what their performance is. Centum, if you think about it from a point of view of Centum as an investment company, then Centum has the majority shareholding in these businesses. And this majority shareholding, as far as Centum is concerned, really helps us in two things. So number one is it allows us to direct the strategic direction of these businesses so that then they can perform better and be able to pay dividend. What Centum is concerned with from these businesses is really the dividend that they are able to pay for us to recognize in the company total return statement from these businesses. So if you look at the performance here, our performance was a net loss of about 1.4 billion at consolidated level. And the biggest driver was really the Two Rivers development businesses. And here it was more a question around their capital structure. As you can see, their finance costs were quite significant. And this was also one of the businesses where when we did our revaluations, then that revaluation also, it reduced the revaluation at Centum level. James mentioned earlier that we will be relooking at how we do our reporting framework, our financial reporting framework, so that then we're able to provide the users of our financial information with adequate information to enable them view the business. The decision makers at Centum level, the board, the management, all look at the company total return statement. And that is actually the statement that I highlighted earlier that drives it. And I think it's also what the vice chair has mentioned in terms of how to look at Centum, especially from a dividend payment perspective and where the dividend comes from. Thank you very much. Can go to the next slide. I now hand over, sorry. So this is the statement of financial position of the consolidated balance sheet, basically. And this is also, again, an aggregation of all the assets in that business, in all the businesses. So if it is Longhorn, it's an aggregation of the books, the inventory they're holding. Whether it's Centum Real Estate, it's the work in progress of the residential units and the projects that they're doing. So really for us, when we look at this statement, it's an aggregation of the same. Thank you very much, and I'll hand over back to James to take us through the financial outlook. Thank you.
Thank you very much, Wambua, for that presentation. Now, in terms of outlook, we're really focused on two things. One is dividend enhancement. That is critical. We are already half year into the year. We've seen an improvement in the gross cash return coming into the portfolio. There's an improvement this year compared to last year. In terms of the outflows, the finance costs this year are lower than last year, largely because last year we also carried the bond for a portion of the year, and we've not carried it for any portion of this year. So already we're in a better position than we were last year. We are working on a couple of exits, and if they go through, we intend to fully retire the debt, which will fully extinguish interest costs from our P&L. And we're also working on further cost rationalization. That is a work in progress. And so all these measures are being taken so that come next year, we're able to pay 30% of the net annuity, of the annuity income. So this is something the board is very keen on, and it's one of our primary objectives. We then have initiatives to continue to grow NAV, having taken the impairment provisions. As part of our strategy review this year, we've done value creation plans for all the portfolio companies. And there's promising efforts and outcomes that are taking place at each of the companies, so that we can start having an upward movement on the NAV. And we are working on a number of initiatives which are currently under consideration by the board that will hopefully help in closing the price to NAV gap. We have significant support from the major shareholders of the company who continue to and are interested in making additional investments. So the current price position is actually driven by very few shares trading, largely small lots that are trading. And the board is considering various options of what can be done to help close the gap. So I'd like to summarize our outlook in terms of those two focus areas. I think with that, I can conclude the presentation and hand over to the chair of this meeting. Thank you very much, ladies and gentlemen, for your kind consideration, and I would like to take this opportunity to thank the management of the portfolio companies and my colleagues at Centum and the board for the support that you've accorded us, and to our shareholders also for your wonderful support. Thank you very much. We're very grateful. Asanteni.
Thank you, James. I think I will now request Michael Mugasa, the representative of PricewaterhouseCoopers, the company's auditor, to read their reports.
Thank you, Vice Chair. Good afternoon, shareholders. Our report on the financial statements for the year ended 31st March 2021 is on pages 99 to 104 of the integrated report. I'll now read to you our report. The financial statements are on pages 105 to 229 of the integrated report, and our report on the financial statements. In our opinion, the accompanying financial statements of Centum Investments Company PLC give a true and fair view of the financial position of the group and the company at 31st March 2021, and of their financial performance and cash flows for the year then ended, in accordance with international financial reporting standards and the requirements of the Companies Act 2015. Our report, as required by the Companies Act 2015, is on page 104, and I read it to you. Report of the directors. In our opinion, the information given in the directors' report on pages 94 and 95 is consistent with the financial statements. Directors' remuneration report. In our opinion, the auditable part of the directors' remuneration report on pages 96 to 97 has been properly prepared in accordance with the Companies Act 2015. I signed our report on 26th July 2021 following the approval of the financial statements and the directors' reports by the board. Thank you, shareholders. Back to you, Vice Chair.
Thank you very much, Mr. Mgasa. I would like now to invite the Company Secretary to provide some guidance around how we'd like to handle the question and answer segment of the meeting.
Thank you, Chair. Shareholders, we've endeavored to provide a few options for shareholders to be able to better interact with us when asking questions. Shareholders may vote or ask questions at any time during this AGM by accessing the appropriate menu on the AGM portal through either online access and then selecting on the voting or Q&A tab on the AGM display screen, or through the USSD number *384*041# and selecting the voting or question option on the main menu. Shareholders who wish to ask their questions live during the AGM are requested to join the AGM meeting room by clicking on the Join Zoom meeting link directly below the AGM broadcast screen. Once in the meeting room, please click on your profile to raise your hand and wait to be selected for joining the AGM meeting. We will take a few questions from the shareholders in the AGM meeting room. You may continue watching the AGM in the meeting room as you wait to be selected. If you're selected, please ask your question clearly and concisely for efficiency purposes. Please note that due to the AGM time constraints that we have, we may not be able to take all the live questions from shareholders in the meeting room. It is important to note that members who are joining live need to turn off the sound on the AGM broadcast screen when they are selected to ask their question. Otherwise, there may be an echo that will prevent us from hearing you clearly. Over to you, Chair.
Thank you. All the resolutions that are required to be passed at this meeting shall be read by the Company Secretary, and we shall invite questions on the resolutions during the meeting. Once we have addressed the questions on the resolutions, we shall invite shareholders to vote on all the resolutions. We shall conclude all the business of the AGM and then allow shareholders to vote up to 1 p.m. today. The results of the voting will be published on www.centum.co.ke, as well as published in the dailies within 48 hours after the closure of the voting time. I now call on the Company Secretary, Mwangi Bogo, to read all the resolutions to be voted on.
Thank you, Chair. Prior requests have been made for our shareholders to propose or second each resolution. The resolutions to be voted as provided for in the notice are as follows. First, to adopt the accounts for the year ended 31st March 2021. I confirm that Justus Mugambi Kihara has proposed and Jeffrey Maonga has seconded. Second, to declare a first and final dividend of Kenya shillings 219,500,000 for the financial year ended 31st March 2021. I confirm that Grace Wanjiku Kemani has proposed and Dominic Billy Kitetu has seconded. Third, to approve the directors' remuneration reports for the year ended 31st March 2021. I confirm that Kefa Nyange Mkombola has proposed and Robert Kenneth Bunyi has seconded. Fourth, to approve the election of Andrew Mukite Musangi as a director of the company. I confirm that Stephen Irongo Kimani has proposed and Simon Gikonyo Mwaneki has seconded. Fifth, to approve the election of Kenya Development Corporation Limited, the successor in title to the Industrial and Commercial Development Corporation, as a director of the board of directors of the company. I confirm that Catherine Nyadhama Karoe has proposed and John Waweru Karanja has seconded. Sixth, to approve the re-election of Dr. Moses Ikiara, a director retiring by rotation. I confirm that Gabriel Opondo Maoga has proposed and Brian Mwirigi Mutuma has seconded. Seventh, to appoint PricewaterhouseCoopers, PwC, as auditors of the company. I confirm that John Kipchirchir Bet has proposed and Bernard Olwete Mbeva has seconded. 8, to authorize the directors to fix the auditor's remuneration. I confirm that Amos Mulei Mbidhu has proposed and Kevin Willie Hagaba has seconded. Back to you, Chair.
Thank you, Company Secretary. We will now move into the question and answer session. And before I ask our CEO, James Moria, to respond to a sample of the questions raised by our shareholders, I'd like to respond to one that was directed to the board. This is a question that has come in from Peter Mwakio Tole. Peter says, there is a need to review the existing dividend policy. The current dividend payout is the primary reason why the share price has declined and remained very low. Those of us who bought the shares at 40 shillings per share some years back have lost a lot of value. Can the board please look into this? So, Mr. Twole, I'd like to reassure you that the board is looking into this with great detail. As you heard from the CEO's report, we've had a specific retreat around this issue to make sure that we assess what is driving the share price and to make sure that we take in concerted efforts to bridge the gap between the share price and the net asset value of the company. I would like to start by reassuring you that the share price does not reflect the intrinsic value of the shares, of the value of the company. The net asset value per share, as you have heard from the CEO's report, is 3.6 times greater than the share price. And so the share price does not reflect the value of the share that you're holding. Having said that, we do understand that this is a matter of concern to shareholders and to the board and management as well. And so we have explained that we will be taking on board certain initiatives to address the main drivers of the gap or the decline in operating profit of the company, because the cash operating profit is from where the dividend is paid. We have explained that we will be taking care to make sure that we reinvigorate the income that comes from our portfolio companies and shedding the companies that don't have the cash generating potential that we would like to see them have. We have also explained that we'll be looking carefully at the cost structure of the company and reducing the costs to realign them to the commitment that we have around the allocation of our income that is supposed to be driven and directed towards costs. And we have also explained that we will be working hard to pay down our debt so that the financing costs that are taking out value from the income that the company is gaining can go down to zero over the next few years. So we have committed to do this. The board is very concerned. We're quite aligned with you, and we will be working to make sure that our efforts bear fruit. We're working hand in hand in management, and we can reassure you that this is of utmost priority to us. I will then hand over the following questions to the CEO.
Thank you very much. I think the first question is from Gakuhi Charles Gedido. How do you explain the disappointing performance of the company share price over the past 12 months? Do you view this as part of a broader trend affecting Centum in the future? I think that's one of the questions that has been asked, that has been just addressed by the Vice Chair. Obviously, the decline in the dividend also may be partly contributed to the decline in the price. But also it is interesting to see that the price has recovered by about 27% from 14 shillings to 17 shillings. So it's on a recovery path, and we are continuing to undertake a number of efforts which will probably see it recover even further. The question on dividend has been addressed exhaustively by the Vice Chair and also in our respective presentations. That's question 2. We can move on to the next question. Would you like me to take questions from the Zoom? Thank you.
Thank you, Dr. Moria. We will now take some live questions from the Zoom chat room. We have some chats that have come in from shareholders. So Jay Halley is really excited that the company will soon be 100% debt-free and says kudos to the Centum family. Rafael congratulates the leadership of the company for the good progress. Simon Cairo thanks you for the excellent presentation. And we also have a comment on the rare Vepingo education community development, that it is a good initiative. Our next question comes from the shareholder, Kian Mushtaq, and he asks, why are the annual and interim financial statements presentation delayed by more than 6 months from the date of the end of the period? The financial statements for the period ending as of 31st March 2021 were not published until August of this year. Thank you, Chair.
Okay, through the Chair, and thank you, Mushtaq, for that question. So I'll answer the question in 2 ways. Our year end is 31st of March, and thereafter we have about 4 months for us to publish the financials. So the reason you have the 4 months is really because of, one, remember, we prepare both the company statements, the company financial statements, and then we also prepare the consolidated financial statements. The consolidated financial statements, to prepare them, we rely on all the financials that have to come from the subsidiaries. And therefore, we have to wait for each of these subsidiaries to finish its audit, and then for us to use their financials then to amalgamate and prepare the consolidated financial statements. That's the first item. I think the other item is just to note that given that we are a listed entity, we are within the regulatory timelines and ensure that we prepare the financials within the regulatory timelines. So that is really the reason why the financials end up, come out, the financials for 31st March come out in August. Thank you.
Are there more questions on Zoom, or do I take some of the ones that have been sent to us? Okay, thank you very much. We've received a number of questions online. I'll take the ones that I think are fairly relevant. There's a question from Tole Mwakio Peter. He's asking about... no, he's asking a different question on housing. He's asking a question on what our subsidiary is doing on affordable housing. And this is an area of interest to our subsidiary, Centum Real Estate. And we have a number of developments. There are a number of developments on the affordable housing space, including Mzizi, which is at 2 Rivers, where you have a 1-bedroom house at 4 million shillings. There's Elma in Kasarani, which is broken ground. There's Pavilion near Safari Park. There's also Palm Ridge in Vipingo, which is fully sold. There's Bella Vista and Palmarina. And they are working on a number of other initiatives. Joseph Muga Owino asked a question, is Centum looking at other investment ideas, for example, in areas like software development? The answer is that yes, we are. We've invested in many other sectors, and these include financial services, agribusiness, automotive, education services. We also have investments in companies such as Tier Data, which is a technology service provider. And the investment criteria that we've approved does not limit us to any sector. It is very company specific. As long as a company can deliver the expected returns within the acceptable risk profile, then we are open to investing in it. Kitetu Dominic Mbili asked a question: how has the board managed to minimize adverse exchange rate fluctuations arising out of COVID? We've taken a number of steps. I think the most critical one was to extinguish our dollar-based liabilities, which we did in the last financial year. There's a question on there are a number of questions around shareholders who have not received their dividends, and I think those probably will be answered by C&R, those who have not received the dividends. But for this particular dividend that we've just approved, this will be paid in the month of October. So this will be paid next month. And I think you've all been called, or you can register whether you want to receive it on M-Pesa or whether you want to get a check or a direct transfer. That is currently ongoing. But the rest of the previous year dividends have largely been paid, and if you've not been paid, please make arrangements to get in touch with the registrar. I think that is a sample of the questions that I think were fairly relevant that have come to us. Thank you very much.
Thank you, Dr. Moria. Shareholders, having responded to these questions, we will now close the Q&A session. We remind shareholders, though, that any questions that we have not been able to address during the AGM will be collated and responded through our website within 48 hours. Thank you. Shareholders, we will now conclude the business of the AGM with a note that voting will be enabled up to 1 p.m. The results of the voting will be published on the company's website 48 hours after the closure of the voting time. We also advise shareholders that a voting tutorial video will be broadcast at the end of the meeting for any shareholders needing guidance on how to vote. Please keep watching the broadcast after the AGM has ended to view this tutorial. I now invite the Company Secretary to confirm if any other matters have been received.
I wish to confirm that we've not received notice of any other matters, Chair. Thank you.
Thank you, Mr. Mbogo. Ladies and gentlemen, as we have not received due notice of any other matters, we have now concluded the business of the 54th Annual General Meeting. I would like to thank all our members who have participated in making this AGM a success. I now declare the meeting officially closed. Thank you very much.